You have found Authentic Business Adventures, the business program that brings you the struggle stories and triumphant successes of business owners across the land. Downloadable audio episodes can be found in the podcast link found at drawincustomers.com. We are locally underwritten by the Bank of Sun Prairie. Today, we're welcoming / preparing to learn from Jason Brown of the Brown Report, which, Jason, I got to say, I'm pretty excited. I dabble in the stock market enough to make a profit, but I get the impression that I'm nowhere near the level you're at. So I'm excited to learn from you today. Let's start with, what is the Brown Report?
Awesome. Well, I'm excited to be here. So thanks for having me. And hopefully I can impart some knowledge upon you and the community. As far as what is the Brown Report, I know sometimes people think because I'm Black, it's called the Brown Report, but it's actually not. It's because my last name is Brown. It's Jason Brown. And so the Brown Report was really started because, I don't know how much of my story you know, but like we grew up pretty poor in Detroit, Michigan, and we were sleeping in sleeping bags when we were young.
Oh,
And so
wow.
we didn't even have beds. I remember going to my best friend's house. I was like, "Wow, you have a bed." And he kind of looked at me like, "Of course I have a bed." I was like, "Well, I thought beds were for grown-ups because we slept in sleeping bags." And so we didn't get
Wow.
beds till later on.
All
And so
right.
just to give you an idea of just how broke we were. And so I always wanted to make money and figure out how do we change our situation. And I remember, studying and trying to figure out how do people get wealthy. And it's like always about the stock market. And so I was like, all right, I want to get into the stock market. You hear those stories where it's like, if you would have took $2,000 and put it away when you were 18 and came back later, you'd be a millionaire. So
Yeah, right.
I was like, right. So I'm like, why don't more people do that? So I took my graduation money at 18. I take $2,000 and I put it in I go to a well-known bank. I'm like, I want to open an investment account. She's like, what's your goal? I'm like, I want to be rich. Like, why does anybody want to do this? And so she's like, so you want aggressive funds, right? And I'm like, yeah, I want aggressive funds. And so James, I come back 2 years later after putting my $2,000 from graduation money, all the money I had at that time. Come back 2 years later, I'm thinking I'm going to be at least up $4,000, $6,000, and I go to check on my account, and it's down to $700.
Oh, wrong direction.
Right. And so I asked the lady, like, what happened? Y'all lost $1,300. I'm like, I could have lost $1,300 of my own money. And so I was like, give me, because in my head, I'm thinking you go to the professionals because they don't lose money. And so that was kind of the best and worst day of my life. Because once I realized that they lose money, I'm like, I could have lost my own money. So I said, I'm going to take the $700. I'm going to do it myself. So I spent $200 on some gym shoes, something to make me feel better. I'm like, if I lose this other money, at least I got some gym shoes or something to
Yeah,
show
there
for
you go.
it. And so at the time, I'm making $8 an hour working for Sprint PCS. I'm selling cell phones inside of Best Buy. And so I'm making $64 on a Saturday. And I thought to myself, if I could just make $50 and I wouldn't have to work Saturday, and I can have my Saturdays back. So our stock at Sprint was $5 a share. I got $500. I'm like, great. I can buy 100 shares, and all I needed to do is move 50 cents, and I can make my $50, right? So I bought at 5. It immediately falls down to 4. I'm like, this doesn't work. Stock, but not that it doesn't work. I'm like, I got these conflicting messages. I'm like, well, people say you got to be in it for the long term. You got to be patient. So I'm like, all right, let's wait. Let's see what happens. It goes back up to 5. Now I'm like, okay, great. I just need to go to 550. Falls to 4 again. At that point, I'm pissed. I think the stock market's rigged. I felt like they know my number. They like, when it gets to 5, don't let it go up. Send it back down. Like I felt like it was a
Jason's
man
in
behind
it.
the
We gotta send a dive, dive, dive.
exactly. I felt like it was a dude behind the curtains, like, send it down. And so it fell down to 4 again. I'm like, it's rigged, it's gambling. There's no way you can make money in this. That's why they need your social security number to open an account so they can tell the big players when you're in and not let it go there. That's what I thought. So then it goes back up to 5 again. And I said, I've seen this before. So I said, I'm going to get out at 5 and break even. It fell down to 4. I got back in and went back up to 5. I got out, actually made $100.
Hey, nice. Now we're talking.
Right. So what I didn't realize was that pattern was called a channel in stock. And so now I'm like, what other patterns out there that exist that I don't know? So I study these patterns, And now I'm like getting really good with my $500, making $100 here and there. So I'm like, how do I get more money into the machine? So I got a scholarship to Mike Ilitch School of Business, Wayne State University here in Detroit, Michigan. I had an academic scholarship. I knew if I applied for student loan, because all my friends were getting their student loan refund checks and they were spending it on clothes and shopping. And so I was like, I wonder if I could get a student loan and they would double pay the account. And I knew I would get the refund. So I applied for student loan, the scholarship paid tuition, the student loan kicked in, but I got the refund check of 10,000. I put it in the stock market. I grew it to like $120,000 as a 21-year-old college student.
Wow.
So here's what happened. I dropped out of school now. I'm like a junior, going in my junior year. I dropped out of school. I'm like, I'm making more money without working for anybody else, without a degree. Why would I finish school? I'm full-time day trading. I make $100,000 a year. Year 3, I'm going to buy a condo downtown Royal Oak, Michigan for $500,000. I risk $250,000 trying to make $500,000. I lose it all. I blow up my account. I have to move back home to Detroit to my mom's house with bars on the window. I had to sell my car. I had a Lexus on 20-inch rims. I'm living the ultimate bachelor life. And so I had this crazy idea to go full circle. You said, what is the Brown Report? I had this crazy idea. I said, I'm going to record myself making the money back. And I'm also going to share the lessons I learned along the way from losing that much money. And that's how I started my YouTube channel called The Brown Report and my website. It was really just a way for me to be accountable to myself and document making the money back. Because I said, well, what would Warren Buffett do? I'm like, if Warren Buffett quits, he no longer becomes Warren Buffett. He no longer becomes a billionaire. And I'm sure he lost $2,000 before. So, or $250,000 in my case at that point. And so I said, let me just document myself making the money back. And that's literally how the Brown Report got started. Just me reporting on making my money back from the stock market.
So how long ago, let me ask, when you're in school, let's talk about the first 100,000 you bumped up. What was the course of time there? Was that a couple of years or was that months?
So this is about, I graduated high school in 99. I grow the account maybe 2 years later. So we're talking like 2000. No, I'm sorry. I come back 2 years later. They lost my money. So it's like 2001. I take the rest of the money, say I can do it myself. I'm full-time trading. So it's probably 2004, 2005.
Okay, so 2-3 years, something like that. And that was right after the .com bubble.
Yeah.
But before the whole housing crisis, whatever.
But before that, yep. And so then I lost the money. Then I had to go back to work and get a job and get back into the game. And then I documented myself making the money back for the next 5 years.
All right.
And here we are, teaching people the lessons of making it, losing it, and making it back, which is technically how this saying came about. You never go broke taking a profit, because when I lost that $250,000, I was up 100,000, but I didn't take it because I was like, I want to make 500,000 to pay for this condo. 100,000 wasn't enough. And now that's where the saying actually came from, that you never go broke taking a profit. So
gotcha.
That's what the Brown Report is.
So you can make some money, skim off the top to put it back in your pocket, and then keep rolling with some.
Yeah, I mean, the reality is no one trade will get you there. We like to look at our investments and trades like this is the one that's going to put our kids through college, but it's really a series of making good decisions that is going to put your kids through college. It's a series of good decisions that's going to get you out of debt, get you the dream car, get you the dream house. It's usually not one lottery ticket of a trade or investment. And most people come to the market with that lottery ticket mentality. Like, I just need this number to hit. I just need this one stock to hit. And oftentimes that's not something you can build a long-term sustainable future off of.
No. If it was that easy, you'd see everyone being a millionaire, right?
Yes. And the worst thing you can do is get lucky one time, because now you're like,
I know it. I got all the answers now, right? Just ask me. I'm the expert. Oh, that's funny. So 5 years ago-ish, whatever, something like that, you start your YouTube channel. There had to be times where you were making trades where they didn't pan out.
Yeah, well, every trade you make, they don't pan out. But as I started to make money back again, I just started looking at, what went wrong the first time. Number one, we risked everything for one trade. Number two, we were up, but we weren't appreciative. We let greed, and I say we, myself, I let greed take over. And so I started developing these rules like you never go broke taking a profit. So now I take profit when it's 10 to 20%. Um, I try to manage fear and greed by putting my rules into place. Like first of all, I'll look at a trade and say, like that trade, like, did it even have the ability to make me $500,000? And
Oh,
so now I developed like a 1 to 3 risk reward ratio. Like if I'm risking $1, I need to have the ability to make $3. And so as I built my rules back up, and also you have to have an I'm wrong level. So instead of me getting out when I was down 200 and then 175, I just rode it all the way down to like, I think 100,000. Then the next trade, I lost 50,000. And then the next, it was just like, I could have stopped maybe at when I was down 200. I mean, when I was down 50,000, I had 200 grand left. So now I have what's called, and when I teach my students, like have your I'm wrong level. And it's like the level where like if it hits this, I'm wrong about the trade, I'm wrong about the investment. Let me close it out and then look at it with fresh eyes or look for my next
oh,
opportunity. The other thing I teach and live by now is live the trade another day. So yes, trades don't always go right, but make sure you live the trade another day. So if I'm risking $1 to make three, technically I could be wrong 3 times. As long as I'm right on the fourth time, I'll be right back to break even. So you want to be right more times than you're wrong, but it's not about being right every single time. Nobody is the Moses of trading or is the God of trading. And it's like you're only good if you don't lose. That's the wrong mentality. The key is to, when you lose small, and when you're right big, and you need to be right more often than you're wrong. If you can get that combination of probability and statistic, it's like 3 steps forward, 1 step back, 2 steps forward, one back, 3 steps forward again, maybe two back. That's the game of investing. You don't just go, I'm so good. Every trade I hit is a home run. Um, Even though that's what we wish it would be like, that's not the reality of it.
oh my gosh. I'm still learning that. I remember throwing, oh man, I want to say 3, 4 years ago, something like that. I threw a bunch of money at GE because I thought it's GE, right? Huge. They make rocket ships, they make airplane engines, they make light bulbs, like they're everywhere. Not a house exists in the US or probably even the world that does not have a product that GE makes. And
Yeah.
GE, they're still having a bad day. Just right. I just read some
Well,
Jack
lately
Welch
they've
books.
been doing really well, but I'm looking at the chart. If you vested back in like, 2021,
Yeah.
all it did was just get cut in half pretty
Oh,
much.
yeah. I was getting beat up. Anyways, I ended up reading a book or some quotes or something like that from Warren Buffett. And he had a saying in there that said, you do not have to make the money back the same way you lost it.
Ooh,
And I
right.
was like, man, and you think about it and you're like, I've held that GE stock for a couple years. It's been going way down. Maybe it's time to pull the chute. It's not as dreamy as something like a Tesla or something like that. Kids are bored of GE, even though it's everywhere. They don't know. So
Yeah.
I
And we
figured,
call
hey,
that
pull.
we call that revenge trading, right? Like some
Oh,
people revenge trade and it's like, no, I gotta make it back and I gotta make it back with this stock. It's go give me my money back. And that's that revenge trading. Like I want revenge. I want my money back.
all right.
Which is similar to Warren Buffett saying you don't have to make it back the same way you lost
Yeah.
it. We say no revenge trading. Like move on to the next chart.
Yeah.
Because our ego gets involved, right? And
Well,
you
ego,
know,
and I guess from my point of view with GE specifically, and now I'm running into the same issue with Intel stock. I think this should be higher than what it is. Like this is a company that's everywhere, stable, and on paper to me it looks good, but clearly there's something either I don't know or the emotional train that's running in people's head isn't impressed with it. And in the end, that's what the value is, so to speak, I guess, is what the market says, right? Not necessarily what the paper says.
that's one big thing to understand. That's what I learned from school. They was teaching us to do all these valuations and what it should be going for, but the market will pay 60 times that multiple if it's Tesla. And then you'll find a company, like you said, maybe Intel GE, and it's like, it should be higher than this. And the market's not willing to pay
Mm-hmm.
percent of the multiple. Like, and you're just like, I don't get it. But I think those textbook calculations don't take into people are willing to pay for growth, people are willing
Mm-hmm.
to pay for future valuations. A lot of stuff is already baked in, so they're looking for what's the next big thing that the company's going to do. Like these are all things a lot of pricing models or book value don't take in. So when we think
Right.
it should be higher, it's like, yeah, but the market is forward thinking and it's saying nope, it should be lower.
Yeah, it's interesting. I was just looking at the value of Ford, and I was looking at it thinking, I think Elon Musk could just walk in the door and be like, I'm going to buy you, and just whip out his wallet and start counting money. Like the valuation, I
Yeah,
want
the
to say
same way
50
he bought
billion or
Twitter.
something like that, if off the top of my head, something like that. I'm like, there's people that have more net worth than what Ford, a company that's been around for 100 plus years, that you see, you can't go down the street without seeing a Ford. It blows my mind. And then I'm wrapping my head around this, like, okay, I got to look at this, that a lot of people are buying and selling are buying more on emotion or hope rather than looking at the numbers.
Yeah, and there's so many different ways to look at it, right? Are you a fundamental investor? Are you a technical trader? Are you a long-term investor? Are you a dividend? I mean, so there's so many different styles. What's important is that you find one that fits you. But I think no matter what your style is, I think everybody needs to learn how to read the stock chart because the stock
Mm-hmm.
chart can tell you with technical analysis that things are changing. You might not know why they're changing for the good or for worse, but what's important is that you can identify that something's changing and maybe I need to get out or something's changing and I need to get in. And that's what I like about understanding the charts and technical analysis, where it's fundamental you could be right, but the market right now isn't ready to accept that. And it
Mm-hmm.
shows up in charts. Whereas technicals, it's like, I don't necessarily know why, but something's changed. They like it at this price. I want a piece of it.
All right. So tell me about the stock chart that you're talking about. You're talking about the basic up, down, dividend ratio, stuff like that? Or can you elaborate on that a little bit?
Yeah, so pretty much the way I like to explain stock charts, because I don't know how much your audience read stock charts or not, but I like to put it like this. Stock charts are kind of like the weather app on your phone. And you don't necessarily have to go to school or become a weatherman or weatherwoman and figure out chemistry or science and what a cirrus or stratus or cumulus cloud is. But if the weather app says it's a 70% chance it's going to rain today, you're going to grab an umbrella. And if it says it's an 80% chance it's going to be sunshine today, you're going to wear shorts, right? So that's how charts are for the stock market. They're not 100% accurate, but they can tell you 70 to 80% chance that it's going to rain or that the sun is going to come out. And if you can control yourself to only make decisions during those 70 to 80% chances of rain or sunshine, you have a higher probability of making a successful directional trade that in which direction you think that the stock or the market is going. And
Oh,
so
interesting.
that stuff shows up in the stock chart.
Okay. So I have to apologize because this looks like it's prediction or somebody's predicting. Is that right?
Yeah, you're predicting to a certain level of accuracy, right? That's why I always say 70, 80%. You're not
Yeah, not a
predicting
hundred. Not a hundred.
100%, but you're saying, hey, this setup normally means the sun is going to shine.
So is that with the stock charts? Are you going through I want to say guru, but that's not going to be right. Someone like a specific website that offers these stock charts that you're paying a monthly nut to? Or is
Yeah,
this
so
the guy in the corner
stock
with the
charts.
cardboard sign that says
Oh no,
world's
so
ending?
stock charts are free. They're free.
Okay.
You can get them through any broker if you have a Charles Schwab account, a Webull, a Robinhood, any account they offer charts. Getting access to the charts is not most people's problem. Understanding what they're looking at is most people's problem because there's levels called support and resistance. Support is just a price where people love it, and then resistance is a price where it's like at that point nobody wants to buy it. In fact, people start selling. think of it like a house. There's certain neighborhoods where it's like, if it get that low, you like, I don't even need a house, but I'll buy it because I can't believe it's that price. Then
Sure.
there's certain prices where like it gets so high, like nobody wants to move into that neighborhood. In fact, people start selling their house. They're like, look, at these prices, it's time to move. Same
Hmm.
thing happens with the stock market. There are certain prices where it's so low that it's like you look at Amazon, right? You start getting down to literally almost about where it's at now in the 120 area, and you're like, okay, they got the biggest e-commerce shopping platform. They got maybe millions of people that pay 149 a month just for Amazon Prime. You also got the people who the retailers who pay to ship their stuff through Amazon. They also run ads, right? And so you look at that and you say, there's no way they're going to zero because they have an embedded customer base. They have e-commerce on lock. They got, right. So it gets to a certain point where price point where you're like, there's no way it should be below that. And
Hmm.
so understanding where that shows up on the chart can help you make a better decision when it's time to buy.
Fair, totally fair. It's funny because that reminds me of when I was looking at GE. GE was so low that I thought if they went out of business and had to sell everything, I'm like,
Yeah.
that would pay
Like
for
it'll
more
be
than all
worth
the stock.
absolutely.
But it didn't
Absolutely.
happen. Whatever. So, but I get what you're saying. That's very interesting. So when these people are predicting, or maybe it's algorithms are predicting, I imagine there's some just like with weather. One weather person says it's going to rain, another person says it's going to be sunny. They're looking at the same sky. So do they just
Absolutely.
have different patterns that they're looking for, or what are they looking for where they differentiate?
Yes, great question. So that's a really good question. First, I think people got to understand that's what creates a market. All right. Is that we're looking at the same thing through two different lenses. One person says, I think it's going to go up. One person says, I think it's going to go down. And maybe even a third person says, I don't know. So I'm not doing anything. I'm sitting on the sidelines. Right. But to make a market, you have to have someone who thinks it's going up, someone who thinks it's going down, or you have to have someone who thinks it's undervalued and someone who thinks it's overvalued.
All
Now,
right.
we may be looking at the same chart, but where the differences are going to happen is life. And what I mean by life is you got some people that are day traders. They just want to jump in and send the stock up for a day and send it down. So that's going to be a group of people that can move it. Then you got people like Warren Buffett who may come in and buy billions of shares because he's investing over the next 3 to 5 years. And so you might have that type of money that comes in that doesn't worry about what it does every day with the fluctuation. You have a different crowd that's like, this money has to last me in retirement. So I don't want to take risk on certain tech stocks. I don't care what the chart says. So there's all these different reasons why we all look at the same chart and make a different decision. And also remember, I teach people to make decisions only in the 70 to 80%. Then you got the people who take the 50-50 chance. Like it looks good enough or close enough. 50% chance it can go up, 50% chance it can go down. You got the gamblers of the world, the Reddit people, the people who are just placing bets. So all of those things play in a different temperament of why one person would buy, one person would sell, and one person would just sit out altogether.
All right.
And not only that, though, there's three things that move the market. There's the technicals, the practicals, and the fundamentals. So if we're both looking at the same technical chart, then next we're going to layer fundamentals on top of it and say all the reasons I named about Amazon is why I like it. But then you go into the practicals, which is like, okay, we got a government shutdown. You got the UAW strike. That means less people go be shopping for Christmas if they aren't, they employ a lot of people at the big three. Less people are going to be shopping for Christmas. Less people shopping as less people shopping on Amazon. Less people shopping on Amazon, less revenue for them to collect from the retail. Like, so now you just have also what's going on in the world that, the Fed's going to raise interest rates again. Less people are going to use their credit cards. So it's not just you can look at the chart and stop there, but the chart starts to say something is wrong. Then you can go to fundamental and say, is it bad leadership? Is it a bad product? Then you can go to the practicals and say, what's going on in the world? Is it just because it's interest rates? Is it because Russia just launched a missile at Ukraine? Those other things also play into what would move the stock up and down. But technicals is like your first If you could at least read the chart, you can have an idea if it's a good or bad stock. Then you go to fundamentals and say, why is it good or bad? Then you go to practical and say, what's going on right now in the economy that either will keep it going or that could derail what's going on right now.
All right. I see what you're saying there. What's
So you really
interesting.
start to build a process on top of your technical analysis. You
Yeah.
don't just look at technicals, but you start there. And then if you build a fundamental and a practical thesis, you really have a bona fide game plan of why you're buying or selling the stock.
So let me ask you, I'm going to dig into your secrets a little bit here, if you don't mind. When you are day trading, are you keeping track of just a few dozen or maybe 100 or something like that stocks? Or are you looking at the whole thousands of stocks out there and trying to keep track of all that?
So I don't day trade as much anymore. I do what's called more swing trading, meaning I'm looking for patterns that are going to play out over the next 30, 60, or 90 days. So usually my longest investment or trade is about 90 days. I don't I know how to day trade and I have a program that teaches it. But again, I'm at a point in life where I don't want to sit in front of the computer all day. And so
Just
when you're day
constant.
trading, number one, you're looking at an intraday chart, meaning a 3 to 5 minute chart, and you're looking at every 3 to 5 minutes, and you're trying to jump in and jump out or trying to catch a directional turn for the day. It's very profitable if you have the skills and you have the money because day trading is all about volume. If
Mm-hmm.
I can jump in and get a dollar movement, but I can buy 10,000 shares, I can make $10,000 in a matter of an hour and be done for the day because I was able to buy 10,000 shares. But 10,000 shares of what, $100 company is like $1 million or something like that. Let me make sure I'm doing my math right. But if you're buying 10,000 shares of yeah, it's $1 million, right? So how many people have $1 million to try to make $10,000 a day? But if you could jump in and get $10,000 in one day, maybe your goal is just to make $100,000 a year. You could just trade one day out of a month and take the rest of the month off. So when you're day trading like that, you're looking for small movement. You're able to control big volume. And then you ask, am I looking at all the stocks? Typically, when you're day trading, if you are a good day trader or any good day trader, I would say would tell you, you usually have about 5 stocks. And the reason you don't want to have more than that is you really want to get to know those 5 stocks really well and how they behave every day. You can't do that if you're jumping from company to company to company trying to
Got
day
it.
trade. So you
Okay.
want to focus on like 5. You know them really well. You also want to know when their earnings are coming out, if their CEO is about to speak, if there are any lawsuits pending, because you don't want to get caught off guard that the answer to the lawsuit comes out in 30 minutes and you was like, oh, I didn't know that. So you really want to know the companies, know how they behave every day when you're day trading.
Gotcha. Okay. It's so interesting. When I got into the stock market originally, I just had this picture in my mind that people were keeping track of all the stocks on the New York Stock Exchange or something like that. And I had no idea how high that number was. That is a high number.
Oh,
So
it's
it's
thousands. Yeah, it's thousands.
insane to keep track of all that. So then,
Yeah,
yeah, so then I started whittling it down what I keep track of. And I figured, okay, I'm certainly not the smartest guy in the room. So the people that are making lots of money at this must be doing something similar because I don't know how else you would keep track of all that's going on. So
yeah.
that's good. I appreciate you reinforcing that there. You
Yeah,
also bring up an interesting point about like the government shutdown or whatever, the current problem.
UAW layoffs and stuff.
Yeah,
Yeah.
problem of the day, problem of the week. I'll read the headlines that'll say something like stocks down because of, pending government shutdown. And I always think like, well, I made some trades today, but that wasn't really the compelling reason why I made the trades. So I always wonder, how does this journalist know that? Or what are they using to predict that?
So this is a really interesting topic. The way I like to think of it is journalists don't know anything, and if any journalists are listening to this, respectfully, they don't know anything. What I'm saying is, you have to. The regular people, like because I'm in the industry, I understand, but most people don't understand what a journalist's job is. A journalist's job, whether it's mostly TV, let's just talk TV for a second. We could talk print, but TV, the journalist's job is to keep you watching the show. Because
Hmm.
if they keep the ratings high, what do they make money off of? They make money off selling commercials.
Hmm.
So the journalist's job isn't necessarily to predict the stock market or give you good stock advice. Their job is to keep talking about it all day and keep you tuned in. Now you go to step two, which is like, well, how do they keep you tuned in? Well, what's the number one reason that people tune in to any type of news? They don't tune in because everything's fine today. No, it's
Yeah,
like
right.
the night at 7, this guy got robbed at the gas station and almost lost his life. What did the police do next? It's the same thing. Tonight at 3 o'clock, will they shut down the government or not? And how that's going to affect stocks? The big sell off today, and the number one reason it happened, a hint, how did the UAW tank the market today? Right. So they're just taking what's going on and they're just putting lipstick on the pig and saying, "Oh, that must be the reason why things sold off today." They don't necessarily know, and that may not necessarily be the reason. But their job is to take whatever's going on in the market and make sure you're tuned into it. I mean,
Yeah.
if you really think about it, why would we sell off on a government shutdown or a UAW strike when, if you really think about it, almost every time we go into a government shutdown, which seems to be every year now, they lock themselves in a room and they magically reassess the budget at midnight and they figured it out and the government shutdown averted.
Hmm.
So why would that tank the market? It seems like they avert the shutdown every single time, or we're going to have to raise the debt ceiling limit. And I don't know, if we default, people won't get their food stamps and veterans won't get their GI. It's just like every time they do this, they get to
Yeah.
midnight and they
Yep.
avoid a government shutdown.
If
So
ever they don't, there's going to be some anarchy where the people that are making the decisions are going to have a bad day. So it's in
right.
everyone's best interest to make it happen.
It is. So I'm saying that to say that news is not really what moves the market. There's
Got it.
other things behind it. There's portfolio rebalancing. There could be, now some people could be taking chips off the table in case it does happen. But also sometimes the market is just run so high that it's like it's time to take profits. Is Powell going to raise interest rates again? Like there's other things at play, but the news usually doesn't know. They're just reporting after the fact of what they think, number one, and number two, whatever's going to get you to tune in for ratings.
Right. Got it. Tell me, let's shift gears to the Brown Report specifically. The people that come to you, do they have, broadly speaking, experience in the stock market and they just haven't been doing so well? Or they're just like, I heard there's money to be made. I have no idea how to make it. Jason, teach me.
A
Tell
little
me,
bit of
how
both.
green are they, I guess, when they come to you?
A little bit of both. So we teach people from beginners all the way up to advanced traders. So we have beginner basic programs all the way up to our high level $20,000 a year mastermind. We have stuff as low as $100 all the way up to $20,000 a year. So you could imagine that's a wide variety of people. But the reason we teach everybody, I know sometimes they say you shouldn't say you teach everybody. We really do teach all levels. We don't teach everybody. They have to be somebody that has disposable income, that want to learn, that are willing to put in an hour or two a week to be a good candidate. But the reality is, that's where I started. I just told you I went to a bank and just was like, I just want to invest. And so I created what I wish I had. I was like, how does it work? I didn't know that these patterns were out there. How come no one's teaching these patterns? Um, you know, how do I read a stock chart? What is a stock chart? I had no idea what I was looking at. It looked like hocus pocus. And back then I was just buying books and stuff. And I would buy a book and I have to get a second book to understand the first book. And I get stuck in the second book and get a third book to understand the second one. And I was like, I wish somebody would just show me. And so we teach beginners, we show them through video format, which I believe is the most effective way of learning. We teach them through videos. We also teach them through live trading. And so I'm trading my real money in the market. So I'm showing you what I'm buying, what I'm selling. I'm giving you my analysis, technical, fundamental, and practical analysis of why I think a stock is going to go up or down because I'm looking for these stocks for myself. And I primarily trade options, which is a whole nother story. But, so I'm taking you along that journey. And my superpower is showing you what I'm buying, what I'm selling, and my thoughts on the market. But most people, if they just came in at that point, they wouldn't understand. So we have to teach them from beginners to get them up to speed so that they can understand. When I'm like, the book, like you said, what's that book? I'm like, hey, it's a Bollinger Band breakout. I think it's going to pop above the upper band. I can't stop every time and explain what that means. That's why we teach them in the course the basics and the fundamentals. And then when it comes to the live trading, they can understand and execute with us in a practice account or in their real account if they choose to.
Oh, that's cool. Tell me about the options thing, because that's, I guess I saw that a little bit on your website. But that's a whole nother realm, I guess, when it comes. I mean, stocks, you can get in there pretty easily. Options is a whole new game.
It's a whole new game, but it's not a whole new game. And what I mean by that is people don't understand that they've been playing with options their entire life. And so options is what really helped me grow my account from 10,000 to 120,000. I was a 21-year-old college student. Um, and so options is basically a game of controlling stocks versus owning stocks. So let me give you an example that most people can relate to is a house. If you go see a house that's $200,000, you're like, I like this house. I want to put an offer in on it. You put an offer in, it gets accepted. Okay. They usually ask for some type of good faith or earnest money deposit. So I got here's $2,000. And then they say you got 30 days to get an inspection, get an appraisal, make sure you want the house. So the house is 200 grand, but you just put down $2,000. So if we just stop right there, pause, $2,000 is allowing you to control a $200,000 asset for the next 30 days. You have it under contract. Now, you get your inspection and appraisal. They come back and they say, this house is valued at $250,000 in this neighborhood. And with that composite deck they built and the materials they used, this is about $250,000. So now you have two choices. You can exercise your option and buy that house for $200,000, or somebody else that came to the open house like, oh, I really want this house, but it's under contract with someone else. And you're like, hey, the house appraised for $250,000. I will sell you my $2,000 option contract for $50,000, and then you can go buy the house for $200,000. So now that person pays you $50,000 for the contract to go buy the house for $200,000. So total, they paid $250,000. They're happy. That's what the house is worth. But you just took $2,000 and turned it into $50,000 by controlling the asset without having to come up with the full $200,000.
Oh, nice. Okay.
That is what options are like in the market. You can control Tesla, Amazon, Apple, these higher price stocks for a fraction of the cost. And if the price goes up, you can turn around and sell that contract to somebody else and make the equivalent of if you would have had $200,000.
Nice. So what? So you have the basic tools that came out, I guess, in the past 5-ish years. You got the Robin Hoods of the world, and there's laundry list of other apps where making trading stocks way easier than it was when I first started. Way easier. I got started with E-Trade back in the day when it was $10 a trade or something like that.
Yeah, I remember those days.
Now it's easy. So with options though, I don't even know where to start to get in that game. So where do you send people?
So options is just something you apply for with your brokerage account. So it's not like you go somewhere special. You can do it in Robinhood, Webull, E-Trade, TD Ameritrade, Charles Schwab. It's just understanding that you can control a stock for a certain amount of time. And most people don't understand how to do that, but they do when it comes to a house. When I give that house example, people go, oh yeah, we do that all the time when we buy a house, right? But you can do that all the time in the stock market as well. The other thing I like about the stock market, because we're talking about call options, with put options though, we can make money on stocks falling, and that's where you start to become what we call it power traders, right? We're power traders, and so we have the knowledge and the power to make money if stocks are going up, sideways, or down. And that's when you become a powerful trader, because now you're not only looking for companies that's doing good. If companies or the market is doing bad, you can use put options to make money from stocks falling. And so a lot of times people think like, why would anybody, how do you make money from put options? I don't get it. The example I like to use, and again, when I put it like this, people don't realize they buy put options every single month. And I can guarantee everyone listening, including you, has bought a put option. And they're like, okay, Jason Brown, prove to me I bought a put option. I'll prove it. If you have a car, you pay for something every single month called insurance. Okay. So let's say you got $100,000 Cadillac Escalade and you pay $500 a month for insurance. You are buying a put option on your car. So you, for 30 days, you are covered. If you go smash that truck into a wall and get into an accident, God forbid, and the truck is now worth zero, you get to call up your insurance company and put $100,000 truck to them that is now worthless. They still have to cut you a check for $100,000. And all you pay was $500 a month for that right to put it to them.
All
And
right.
so you can buy put options in the market to either A, protect your account. So if you got a $100,000 stock account, you can buy protection for 30 days, just like you buy insurance for 30 days. And if the market tanks or fall, they'll have to pay you for your stock at that higher price of $100,000. That's the simplest way to explain it, but it works the same way it does with insurance on your car. You can insure your portfolio, or if it's a stock you don't own, the way you make money from it is, let's say it's a stock trading at $100 and you have reason to believe it's going to go down. Jerome Powell is speaking. He's going to raise interest rates. Typically, every time he speaks, the market tanks. You're like, I'm going to buy some put options on stocks I don't own. So say you buy $100 put option for, let's say you pay $2 for that option. That means you can force somebody to buy the stock from you at $100. If the stock falls down to $80 and you can force them to buy it at 100, that's $20 you made in between. So you just took that $2 and you turned it into $20. So because you could force them to buy it from you at 100. Now people say, well, how do you force them to buy it from you? That's why we have courses and we teach this stuff. But you could technically go buy the stock on the open market for 80 and then exercise your put and force the guy to buy it from you at 100. So that's why you can make $20, because you can go buy it on the open market for 80, force him to buy it from you for 100, and you made a $20 spread. Some people say, well, what if I don't have the $80? Again, that's why we teach this stuff, because you could either borrow it from your broker or you can just sell the contract to somebody else. So that's how we're getting into like, how do you unravel the trade? But I just want people to understand the concept that you can force someone to buy stock at a higher price by buying a put option. So when it falls, you either protect your account or you can make money.
All right. That's super cool. I mean, I love that you have this going on. I love that you're training people and all that jazz. And I got to say, one of the best feelings that I've had recently is I was at my in-laws and the kids are watching TV and stuff like this. And I made a trade and I made $40 or something like that. And my wife is looking at me like, what are you so happy for? And I'm like, I just paid for our lunch. On the way up here is $40 at some fast food place. And I was so put off. I was like, $40 for junk. But then I made the money back in the stock market after a couple minutes. And it was just one of those, this is cooler than real work kind of thing. So,
Absolutely. I mean, when you think about how excited you got over $40,
right?
I have videos where I made 400 and over $400,000 on one trade. And so
Wow.
now imagine when I buy watches, when I buy paid off our house in cash and stuff like that, that it like you can go from, oh, this paid for lunch to like this paid for a car that I would never pay for working a regular job. This paid for a house, our dream house that it would have took us 30 years to pay off. And so those big trades all start with trades like that, where you're like, I just made $40 to pay for lunch, because the only difference between $40 and 400 to pay for a car note, or 4,000 to pay for your dream house note, or 400,000, is how much money you have in the machine and how often you can find those opportunities and duplicate that. So
Right.
I don't know how much you had in there to make 40, but just imagine you had enough money in there to make 40,000. Only difference is how much money you had
Yeah,
at
it was
stake.
hundreds. It wasn't crazy. It was just it was one of those things where for a moment I thought I got this all figured out, and then the next trade I didn't. But it was It's one of those where I guess I am to the point right now where I'm one step above dabbling with the little stuff, and now it's time to get into the big stuff. As far as volume of money to make it move, I proved that I can prove to myself, I should say, that I feel like I have a ballpark idea of what's going on. So,
Yeah, and the more money you have, the more strategies you need, right? The more you need to know, how do I protect my account if it goes against me?
mhm,
And the more you have those strategies, the less you're worried when you're putting 30, 40, 50,000 at risk, because you're like, well, I bought a put option. I know I can't lose more than this, right?
mhm.
So people think like, aren't you afraid you're going to lose all your money? But it's like, those are people who don't understand that there are other strategies like put options that can protect your account the same way you protect your car. You don't go out there every day and drive and be like, I'm scared I'm going to lose the whole value of my car. It's like,
Right.
why not? Because you have insurance. Okay, then buy insurance on your stock portfolio. Most people are just like, I didn't even know I could do that. And it's like, that's why we're here to teach people.
Here's the class. Check out the Brown report, right?
Yeah, because again, for me, I was upset that nobody's teaching this stuff, right? Your financial advisor isn't teaching this stuff. They don't want to
No.
for you. They're definitely not teaching it in school, and so the wealthy people are doing it, but they don't like broadcasting what they're doing. And
Mhm.
so once a regular person like me figures it out, I'm like, we got to let other regular people know how this works. Like I'm tired of the people from the other side of the tracks holding the secrets close to their chest. And the beautiful thing about the stock market is if I teach you the secrets, it doesn't affect me. Neither one of us
Right.
has enough money to buy all the excuse me, all of the Amazon or Apple stock.
Yeah, moving the needle just on the one
Yeah.
trade, right?
Yeah, we don't have enough money to move the needle. So it doesn't hurt me to teach or educate on how it works.
Right. I love it. So, Jason, how can people, I guess you got the Brown Report, so I imagine it's thebrownreport.com or something like that, or let's start with the YouTube channel because that's probably the easiest, right?
You know, I got smart and I locked down the Brown Report on everything. And so on YouTube, I'm the Brown Report. On Instagram, I'm the Brown Report. Facebook, Twitter,
Nice.
LinkedIn, you name it. So it's actually easy to find me on any platform if you just type in the Brown Report. But I always tell people always ask, like, how do I get started? How can I test the waters? And I would tell them at thebrownreport.com, we have what's called a stock market starter pack and a stock option starter pack. So if you're brand new to the stock market starter pack will break down like the three most profitable patterns. What do they look like? How do you spot them? How to open an account? And then if you're interested in options, calls, puts, how can I protect my account? How can I control those higher price stocks? We have the stock option starter pack. They're both like 10-page PDFs breaking down how it works and how you can make it work for you. And they're all at thebrownreport.com and as well as the YouTube channel. Everything you can get to just by going to thebrownreport.com.
I love it. That's awesome. Well, Jason, so thank you so much for being on the show. This has been impressive. And I don't, maybe it's just because I was raised dirt poor as well. So I'm not sleeping bag poor, but I was considered pretty poor. It's always fun to learn from other entrepreneurs that pulled themselves up from a pretty low spot financially and are now spreading the word to help other people do the same thing. It's impressive. It's admirable. It's super awesome. So I appreciate that.
It's such a fun way to give back and see people's eyes get open because I know what it did for my life and it's been totally life changing. So thank
Yeah,
you
probably
for having
unbelievable, I
me.
imagine, to a point. You see some buddies that you knew when you were a kid and maybe they didn't make the same
Oh yeah.
choices or
I
whatever.
mean, my life is drastically different these days. I mean, we have a house on the lake. We drive a Rolls Royce. I mean, we just got back from Croatia. We went to Africa this year. I mean, if I were to lay out how different my life is from growing up in Detroit with bars on the window, single parent household, drug dealers in the neighborhood, I mean, it's like night and day difference. And I think more people can experience it, with, especially from my community, without thinking they got to rap, play football, go to the NBA. We always think the Rolls Royce is reserved for those people. The nice house is reserved for rappers, actors, those people. And I'm here to say that regular, everyday people could experience it too. And you don't have to
Perfect.
doctor or a lawyer either.
Yeah, you don't have to go to school for 12 years or that is impressive. That is super impressive. Jason, I appreciate you being on the show.
James, thanks so much for having me, man. I appreciate it.
This has been Authentic Business Adventures, the business program that brings you the struggle stories and triumphant successes of business owners across the land. We're locally underwritten by the Bank of Sun Prairie. If you're listening or watching this on the web, if you could do us a huge favor, give it the big old thumbs up, subscribe, and of course, share it with all your friends that you think could use a couple bucks and some inspiration to get going with Jason Brown and the Brown Report. My name is James Kateman, and Authentic Business Adventures is brought to you by Calls on Call, offering call answering and receptionist services for service businesses across the country on the web at callsoncall.com. And of course, the Bold Business Book, a book for the entrepreneur in all of us, available wherever fine books are sold. We'd like to thank you, our wonderful listeners, as well as our guest, Jason Brown of the Brown Report. Jason, can you tell us the website? I know it's easy, but just for fun, just tell us what the website is one more time.
Absolutely. It's thebrownreport.com. And even if you forget I still own brownreport.com, and it'll take you to the same place. So
Smart man. Smart man. I love it. Past episodes can be found morning, noon, and night. The podcast link found at drawincustomers.com. Thank you for listening. We will see you next week. I want you to stay awesome. And if you do nothing else, enjoy your business.